Good morning, everyone. Lovely to see so many of you out there, and welcome to our online conference, Maximising Your Potential. My name's Sue Staunton, and with my colleague Alex Peel, also on the screen, we're the joint managing partners of James Cooper Creston, leading business advisors and accountants. With our team of over 20 partners and directors, we're passionate about enabling our clients, whether businesses or individuals, and our staff to maximise their potential. That means that we approach each client and member of staff as an individual and not with a preset script. We think about their objectives and work with them to help them to achieve those.
And often we find the most successful businesses and individuals get to where they want to, not just through hard work and selling great products and services, although obviously those things are important too, but by ensuring that they've got the right team around them. And that obviously includes their external advisors. For nearly 100 years now, James Cooper Creston have been working with clients, not just as accountants, ensuring audit, accounts and tax compliance happen, although of course we're great at that as well, but as an integral part of their team, offering a full range of advisory services, working with them to unlock and maximise the advantage they can take opportunities.
As we hopefully enter a new era post-COVID, now more than ever is the time that businesses need to be looking forward, understanding the issues that they may face with regulatory changes, with potential tax changes, and with the structural changes within the wider economy. So in putting together today's online conference, we've been very much focused on providing you with input on issues that we believe will help you to maximise your opportunities in today's and tomorrow's challenging landscapes, helping you to maximise your and your business's potential.
And as hopefully you've seen, the conference is broken into a series of sessions so that you can dip in and out as suits you best. All the sessions will be available later on our website, so if you do miss something today, you can go back to it subsequently, and of course do pass the details on to colleagues and other people who you think might be interested. We've selected our topics carefully and we're covering a wide range of items spanning the life cycle of a business, from incentivising and recruiting staff to maximising an exit of your business. And at lunchtime, we're delighted to be introducing our keynote speaker for the day, Dr. James Bellini, the futurologist. James will be giving you the benefit of his considerable experience of looking into what themes we might expect to be influencing how we run our businesses in the future. Themes that we should all be bearing in mind in devising our strategy.
Alex, we talk about business life cycles. You work with many different types of businesses. Is there a standard business life cycle?
So, I mean, I think if you put into Google, or if you've done any sort of business studies training over the years, you'll see many different business life cycles set out, and there is, to an extent, a standard model that people talk about. I mean, there are various phases that probably apply to all sorts of businesses. Some of those key stages, and you can probably break it down into perhaps 4 stages of development. The startup phase, where the business is really trying to ramp itself up, get going, sell its first products, design its products, set up processes, and probably you've got 1 or 2 people who are doing nearly everything and wearing many hats at the same time. You've got then the growth and establishment phase of the business, a maturity stage and potentially an exit stage to the business at that point in time. And then probably the final stage, and it's something you can perhaps split into 2, is the renewal and perhaps the decline stage of the business. And those 2 stages are often seen as together, because either you renew and you change what you do and reinvent yourself constantly, and then perhaps go round the circle a bit again through the growth, establishment, maturity, or, as happens in a number of businesses, actually that business might start to decline. And clearly that's something that people need to be aware of. And when we're going through our sessions today, we'll be talking in a number of areas about how businesses change as they go through the life cycle, and how you can perhaps make sure that you don't enter the decline phase by accident, and particularly when we talk about business management and monitoring at 10 o'clock this morning, that's something that we can perhaps focus on there. So to a certain extent, so yes, there is a sort of standard business life cycle, but every business is very different, of course, as well. So many businesses will take a different amount of time at the different stages. An R&D, perhaps life sciences company, might have a far longer pre-revenue startup phase where they're obviously doing R&D, researching their product, developing it, and it might take a long time and a lot of money at that stage before they actually have anything that they can sell at all. Other businesses perhaps develop and move far more rapidly. They get from 0 to 60 very quickly, as it were, and often those businesses perhaps have a product ready to sell already, or someone's come out of another company, an established company, with an idea about how they can take that and do it better. Therefore they hit the ground running. They're very quick into the first few stages, and they get to sort of the established stage through rapid growth very quickly. But then they sort of run out of ideas or run out of steam a little bit and need to work out what they're going to do next. So Sue, I think you spoke earlier about devising strategy, and you obviously work with many businesses and help them to formulate their strategies. How do they begin to think about strategy in an uncertain environment?
Well, in times of uncertainty, it's even more critical to think about strategy. I think the first thing is to identify and confirm the core objectives of your business and of you as a stakeholder within that business. The last 12 months have helped businesses and their stakeholders to really think about what they want to achieve, what ultimate shape they want to be in, the markets they want to address, the markets that may well be available to them because there are newer markets that have emerged and other markets that have become more challenging to occupy. Also think about the issues that they need to tackle, and for the stakeholders, actually whether they really want to exit the business if they have an opportunity to do that at the moment. Keeping those core objectives in mind helps management determine exactly how they're going to approach the shorter term tactical challenges that they're facing. But most fundamental, and I think this is what has been really affirmed over the last 12 months, is the capacity within the business to be able to move quickly and to be flexible is absolutely fundamental. I often use it as an analogy of taking a journey. So you might, for example, decide that you want to travel to Newcastle and you set out your ideal route. But let's say the M1's blocked by an accident. So you then have some choices. They're not set out, you don't set out at all. You might forge ahead on your set route. That might mean you don't get there. You might try another route or go by train or plane. Business strategy is very much like that. We all know, for example, that sadly the leisure and hospitality industries have been disastrously hit by the impact of the pandemic, and that many businesses may well not recover as a result of that. But nonetheless, there are businesses within this broader sector where the owners have really thought about what else they could do in order to meet their overall objective of staying in business longer term, of continuing to work with clientele and produce good food, for example, if they're a restaurant. There are Michelin chefs such as, for example, Simon Martin of Manor in Manchester, who said, we can't stay permanently closed and expect to stay afloat. So he's turned away from the Michelin sort of products that he's been doing to selling upmarket takeaway burgers. Other companies such as, or people such as Rick Stein, for example, are selling boxes of pre-prepared meals to be finished at home, and even chains such as Coat are selling ingredients from their normal suppliers direct to the public. So they're trying to keep that, firstly trying to keep income coming in, but also trying to reinforce that sort of loyalty from their normal customer base. Critical now, though, I think, is for businesses to be looking at the future, and in considering this, take into that future lessons learned for their businesses from the experiences of the last 12 months. Learned abilities to work remotely, for example, across a range of different businesses. the use of technology to facilitate more immediate contact across teams, which in turn could lead to an ability to recruit from further afield than just locally, which of course then, you know, if you've got an opportunity to recruit globally, then that gives you phenomenal opportunities for getting absolutely the right people to work within your business.
Yeah, it's interesting, and I've certainly noticed the various restaurant change and tried a few of the Rick Stein boxes myself, which I found very good. So that it is interesting to see how people have developed. So what do you think are the key determinants of a successful strategy? I think,
on reflection, fundamental is that it's centred within the market and wider economic environment the business is part of. So you're not operating in isolation. You don't construct your strategy in isolation. I mean, many years ago, was involved in looking for a bank at a company which had set up a lovely shop somewhere selling beautiful fashion products. But unfortunately, the problem was that it was the owner's idea of what was ideal and what she wanted to sell because she loved the particular product. But she put the shop was in an area that where people weren't interested in that, for example. So, you know, it's very much actually looking outside your own business. I think also for your strategy, it's important that the strategy is measurable and it becomes very much part of the DNA of the business from top to bottom. So, you know, it's a truism, but that people can spend a long time crafting a beautiful strategy, which is heavily documented in many pages of work, and then it gets put in a cupboard and everybody forgets about it and still carry on doing the same old thing. So it's really important that is communicated and it becomes very much part of what you do on a day-to-day basis. But I think most important for me of everything is the team. You need to have a strong and committed management team who work together to derive the strategy and who work together to achieve its successful implementation. And a good management team is about really good balance. It's not just in terms of the function, but also in terms of the personalities and skill sets. So a number of years ago, I was involved in the review of a team that was really good at initial delivery and well known for its swift decision-making capability, but actually struggled to get a final report out of the door. And the problem was that the team in the recruitment of the team, they'd gone about recruiting people like themselves. So lots of people who high energy, real drive and enthusiasm for the early stage of an assignment, but really had no interest in completing and finishing jobs. And that was, you know, what their fundamental problem was. And as soon as they recruited into the team a few people who liked the tidying up bit, then they achieved far better success, and their clients then didn't get grumpy with them for non-delivery.
It's interesting, isn't it? I think it's something that many businesses and many organisations out of the business world actually do, in that they surround themselves by people like them, and actually fail to appreciate that they need the balance and they need all of the different types of people and personalities. And I think it just illustrates the point about getting the right people into business being so critical. And then to do that, it's important to provide them with the sort of environment they want to work in as well, one that sort of they can relate to with their own values, as well as then enabling them to achieve their personal and development objectives. That's obviously only part of the package, which we've talked about so far. Rewarding and incentivising the team appropriately is also critical, and that brings us fairly neatly, I think, to our first session of the day, which is about employee reward and incentivisation. So I'll hand back to Sue now and leave you for now and for the first session of the day, which Sue will now introduce.
Thank you. Right, I'm delighted this morning to be introducing you to our session of employee reward and incentivisation, and to welcome to our panel for this session Alex, Nick and Jawad, who you should be able to see on your screens now. who are going to talk us through some of the key issues within for employee incentivisation and reward. So to kick off with them, Alex, clearly there are many factors that business owners need to consider in retaining an engaged and motivated workforce. Can you explain how the tax system might help them?
Oh, certainly, yes. Good morning, Sue, and just to say well done to you and Alex for getting your timing spot on, really, to move on to this at 9 o'clock. But yes, I mean, I think that there's fortunately, really, I suppose there's lots of tax breaks, if you like, that the legislation allows for that can be used to help incentivise and reward employees and obviously to motivate them. I mean, I think I'd sort of start by making the point that there's no substitute for getting the basics right. You've got to get the salary package right, because after all, really, that's fundamentally what most employees will get out of bed for. But there are a range, in particular, of benefits in kind that can be provided tax efficiently. And even where they can't be provided tax efficiently, for certain benefits, there's a mechanism for the employer if they choose to pick up that tax liability. And these, the importance of these can't really be underestimated, because not all the things that are available will be able to be offered by all employers. But certainly there's common themes that most employers will look to take advantage of, and it really is quite a broad range. So I thought I'd just sort of run through a few quite quickly, just talk about how they get used. I mean, I think the obvious one that most people would be aware of is pension contributions. Obviously employers are required to ordinarily to make employer pension contributions at a basic level, but of course employers can choose to pay more than that, and that doesn't create any tax liabilities ordinarily for the employee doing that, and actually can drive some real benefits. One tax efficient benefit that I think many businesses will have used, and certainly we have in recent months, is just the exemption from tax for sort of minor trivial benefits of up to £50 per employee per occasion. And actually, in our business, so of course, as you know, we've used that to provide various little sort of boxes of gifts and things to staff over the course of the last year, just really as a means of sort of keeping in touch and saying, we're thinking of you. We know we can't see you every day, and actually, I think the feedback that we've had from that has been really sort of positive from employees. I mean, some of the bigger sort of things, for example, would be cars. Company cars are obviously a sort of or employer provided cars, I should say, have a range of sort of tax attributes and can be very tax inefficient. But certainly within the tax system at the moment, if you're looking at providing an electric only vehicle, it's pretty much a no-brainer to try and do that as a company car. It's exceedingly tax efficient for both the employer and the employee. Hybrid vehicles still work well as company cars and can be pretty tax efficient. On a similar vein, I suppose, a parking space at work. I mean, it sounds like it's something fairly trivial, but actually there is a tax exemption for an employer that provides a car or a bike parking space to its employee at or near the place of work, and can save employees significant sums of money. There's a whole range of sort of other things. Where you've got large employers, they'll often provide sort of workplace canteens where the employer sort of feeds people, and that can be a tax-free benefit. It's actually slightly wider than that and can be used to potentially buy certain sort of meals in and things, but there are a range of conditions attached to it. What else? As I said, it is really quite broad. I mean, there's still things such as workplace nurseries and other employer supported sort of childcare. Again, it's quite restrictive, but in the right circumstances, exceedingly valuable, and of course, hugely valued, or can be, by employees, because it's allowing them to care for their children and actually come to work and not face a taxable benefit as a result of that. Work-related training. It sounds sort of obvious, and it is obvious in the sense that, of course, you'd expect that not to attract a benefit in kind. But actually, again, it can be valued by employees if they can see that they're being invested in order to progress their own career going forward, and to give them the skills that they will need to progress. So I think, you know, that's picking up on a few. I could go on. There's all sorts of things like mobile phones and, you know, computers and things of that sort of nature, sports facilities. I mean, one I suppose that's quite topical is that where you've got flexible home working arrangements, you can currently pay £6 per week tax-free to your employees. It's not a huge amount, but where they're being forced effectively to work from home during the current pandemic, that becomes particularly relevant. Mm-hmm. So you know, that's just a selection of some of the key things. I think just before closing on that, there's just two or three other points I would make. So, you know, certain benefits in kind do attract a tax liability, but employers, depending on the nature of what's provided, can pick up the tax for that, i.e. on behalf of their employees via a PAYE settlement agreement. You can also look to use salary sacrifice arrangements to sort of boost the value of the benefits that employees are able to take up. It's more limited than it used to be, but still of value. And I think the point I'd sort of end on really is, you know, although there is this broad range of benefits, it is important to make sure you get it right, because a number of them do have to be provided in a certain way, and some might have to be provided to all staff and things. And what we do unfortunately see is employers sort of getting it wrong, and then it gets picked up on an employer compliance visit, and suddenly they've got some quite large sort of bills to sort of get it rectified. So, you know, use these range of benefits effectively, and they genuinely do add value to staff.
Thank you, Alex. Nick, turning to you. Alex mentioned salary sacrifice in his overview. Can you expand on what that means and how it benefits employers?
Yes, of course. Firstly, can you see me? My camera's on, but I don't appear to be on the screen. I just wondering if you can see me.
No, unfortunately, we can't.
I may well have contributed to the first technical glitch of the live broadcast, but I'll carry on. Yes, so I think we can all agree that it would be cheaper if we could buy things from gross pay instead of net pay. This is because we reduce the gross pay. We essentially get the supply or the product, but we reduce the amount of pay that tax and national insurance is calculated on, and therefore we pay less taxes as well. This is essentially what salary sacrifice is. It's an agreement between the employee and employer to give up some pay in return for something else provided by the employer. The number of items that can be passed through a salary sacrifice arrangement to realise a tax saving has reduced in recent years, as Alex mentioned, but there are still some viable options. For example, electric cars below 75 grams, employer provided pensions advice, workplace nurseries, existing childcare voucher arrangements and cycle to work schemes. They're the most popular. But by far the most common use of the salary sacrifice arrangement is in the form of pensions. So if managed via a salary sacrifice arrangement, the employee agrees to give up a portion of pay. Let's say it's the 5% that's become the norm under the auto enrolment regime as an employee contribution. And in return, the employer enhances their own contribution, the employer contribution, by that 5%. Okay, so what's the benefit? Well, the employee has 5% taken from gross pay and not net pay. So the same amount goes into the pension pot, but the amount of taxable pay that's left to pay tax and national insurance is reduced, and therefore it's cheaper. So typically someone on 30,000, to give you an example, if you're on 30,000 and you salary sacrifice 5% of your earnings, you would save typically £143 of tax in that year. That's straight into the pocket. The employer similarly would save on the employer's NIC because gross pay is reduced. So that's 13.8% on the value of the sacrifice portion. So for the same individual, an employer would save £164 per annum. So we're not talking mega bucks, but we're talking something that I think people agree is better in my pocket than somebody else's pocket. And that might be the full extent of the benefit for some employers. However, the employer can do what they like with their NI saving, and some choose to pass this on in part or in full to the employee's pension pot, so a further enhancement, thus increasing the total reward to the employee whilst not realising any real cost in addition to the original pre-sacrifice position. So more of a win-win-win, I would say. However, On balance, any salary sacrifice arrangement has some other considerations which employees and employers alike should consider. Firstly, they're not particularly flexible. They're good, but they're not flexible. So typically you can change them once a year, unless something called a lifestyle event occurs, and that would be something like pregnancy, in which case you could maybe reduce your what you want to sacrifice. So you can't change the level up or down each pay period. And in the Bureau, we get asked a particular question a lot, which is, can I sacrifice my overtime? The answer is no. It's a variable amount that moves every month, and therefore it doesn't fall within the parameters of the sacrifice. So it really is, it's a static amount that you fix for a year. The second consideration is it is a formal change to the contract. So therefore it's not just legally binding, but there is an admin burden. So again, not a deal breaker, but needs to be considered. And thirdly, the one that traditionally trips people up potentially is that it does reduce employees' annual pay. Now, I've highlighted the benefit of that when it comes to a pension, but actually if the employee is seeking personal borrowings, such as a mortgage, their contractual earnings are lower than they think in their head. And actually the impact could be that the borrower or the lender will lend less. However, in recent years, the lenders have wised up to the whole area of salary sacrifice, and most now take it into account in a positive way. So if you're looking for ways to increase employees' total reward packages without increasing your own total employer's costs, then salary sacrifice arrangement could deliver just that. Pensions are the obvious vehicle, but as mentioned, there are others. So I hope that helped.
Thanks very much, Nick. So, Alex, we've also been talking about what I call sort of cash type of benefits, you know, where an employer is paying for something, or, you know, such as a nursery or food or whatever that might be. But I know that, you know, many SME companies and certainly many of my clients also seek to incentivize key members of staff through participation in share ownership within their company. So could you tell us a little bit more about how that could be made more tax efficient?
Yes, certainly. I mean, I think the key starting point really when you're looking at share incentivization through share type arrangements is actually to think about what you're hoping to achieve through it. Because if you target it incorrectly, it doesn't actually serve to sort of motivate and retain employees. So, you know, what would be appropriate for a business where they've got a sort of grow and sale mandate would be different from a business that's likely to be retained sort of long term. Because clearly, if you're going to grow and sell, then the incentivization is all about the employee sort of shareholder or option holder having the ability to share in some of those proceeds, hopefully in a tax efficient way. Whereas clearly, if there's no intention to sell the business, you know, is there a ready market for any shares that the employee gets? And that's clearly a factor. But also, you know, actually, would you be intending to pay sort of dividends on that? You know, that becomes a more important factor. I mean, for some, obviously, just that sort of sense of ownership can be important as well. So, you know, properly targeted share incentives offer a great mechanism really for aligning the sort of business owners' desires, if you like, wants and desires, with those of key sort of employees. So certainly for the type of companies that we look after, by far the most used tax advantage scheme, of which there are 4, is the Enterprise Management Incentives Share Option Scheme, EMI. So it can be used by most SMEs. I won't go through sort of the criteria. I mean, there's a number of bits to that, but certainly if you've got less than 250 employees, the chances are you'll probably be able to use it. And it typically works by employees are given an option to acquire shares in the company at a point in the future by reference to a price that is fixed today. And the way we very often see it used is they can be exit only options. So where there is that sort of mandate to grow and sell, but the current shareholders in the company don't necessarily want to have a whole load of sort of employee who actually are physically holding shares, they can be granted an option which they can exercise immediately prior to an exercise event, and then they can share in the proceeds. And where EMI schemes work really well in terms of the tax incentives that come along with that is provided the option is granted at the current market value of the shares at the date of grant, then when they come to exercise and sell, the whole of the gain is within the capital gains tax regime and is not subject to income tax. And provided, in most cases, provided they've held the share option for at least 2 years prior to exercise and sale, then they would benefit from business asset disposal relief, which most people would still think of as entrepreneurs relief, and hopefully have a 10% capital gains tax rate on gains of up to £1 million per individual in their lifetime, which obviously compares very favourably with the higher rates of income tax at up to 45%. So it really can be very, very tax efficient to use an EMI scheme. It's also extremely flexible. You don't have to offer it to all your employees. You can offer it only to certain individuals that you really want to incentivise. They can have options over up to £250,000 worth of shares at the date of grant. And you can also, if you want, I mean, there's no minimum period on exercise, so you can set them so that they can be exercised immediately. But you can also attach sort of performance criteria and things. So it's hugely flexible. And so I think that's the key one that I kind of really wanted to pull out in terms of the tax incentivised ones. I mean, there are, as I said, 4 schemes, so there are 3 other schemes as well that will be right in circumstances. But I think the final point is just, it's also worth mentioning, I guess, non-tax advantaged arrangements, because whilst they're non-tax advantaged, they can still be used in a tax efficient manner in the right circumstances. And an example of that would be what's commonly sort of referred to as growth shares, whereby an employee is awarded shares, and this, by the way, can be coupled with an EMI scheme, but you are awarded growth shares that have a very sort of low value today, because on a disposal event, they would only have value if the business gets sold beyond a certain sort of threshold. So that can be used quite tax efficiently. Simply awarding shares can sometimes be quite tax efficient in an early stage business, because the shares might not be worth very much and you can take advantage of minority interest discounts. And then I guess finally, we do also see sometimes something which is sort of a share scheme but isn't a share scheme at all. So you see sort of phantom share type schemes, which is effectively just a sort of bonus type arrangement that's linked to the value of the company. So as it increases, employees effectively can be awarded a bonus. It's not very tax efficient, but at the end of the day, it does provide a cash reward. So there's a great range of things that businesses can look to take advantage of. And
of course, I suppose, Alex, what the share schemes do, or the share option schemes do, is to very much focus staff on helping to build the success of the business and grow that business, because they've got, as it were, skin in the game on that.
Absolutely. I think that's fundamentally what it's all about, and I think the importance of it to certain sort of key employees at a certain level can't be underestimated. I mean, it's almost expected, I think, for sort of key hires in a lot of SME businesses now, and it's something that we spend a huge amount of time advising on, and there's not necessarily one size fits all, but it's about looking at the individual circumstances and working out what looks right for that individual business. Yeah,
thank you. So Nick, I mean, Alex was talking about the share options, which are not sort of cash related, particularly on when they're first granted to the employees. But what other incentivization things are there for employees that aren't money related, if you see what I mean?
Yes, no, I do, and I think this is a topic or an area that is shaping the way that the employers engage with employees, right from the first contact and recruitment through the life cycle of an employee's journey with an employer. Mm-hmm. If we take a moment to explore some of the options, if I take a look at a handful of choices and give us a mix of the traditional things that employers have always been able to do, and some newer options that we will see shape the future of the employee-employer engagement, as I see it. It's probably just worth confirming that whilst the options might well incur a cost, indeed most things do, they do not result in the employees receiving cash, which I think is the basis of the question.
Yes.
So I would kick off with holiday entitlement. Everyone would like more paid annual leave. So this is increasingly, increasing the base entitlement of staff has always been a great option with employers that always gets a positive employee support. What I would say though is that the financial cost to the employer can be large if they have a large number of employees, and often not considered when planning such a move. So remember, staff are employed to perform a duty and they have a real daily cost. So my only warning would be take this into account. Staff still need to be paid when they're on annual leave, so consider that cost carefully, to see if the scheme is affordable. Certainly, if they are affordable, they're a great way to infuse staff and create goodwill. Two things vital to enhance the employee-employer relationship. Allowing staff to have their birthday off, for example, is a great example of how an extra day can be given and does not lead to a lot of people being off at the same time, unless you're very unlucky and have employed everyone on with the same birthday. Flexible working hours are another example of how employers can help employees meet the increasing demands of the work-life balance. Usually with the caveat of a set core of hours, staff can work to a daily or weekly pattern that enables them to take care of tasks during the working week instead of trying to cram things into the weekend. Again, the needs of the business can be met by the core hours caveat. Such schemes are always subject to business need, and employers should consider making them discretionary and non-contractual. In fact, that's the same with most of these things. This allows you to introduce them, but makes it easier to remove if they become problematic. Next, and I think that for the future now, I'd consider employee well-being. This is a subject, it's a hot topic currently, not least due to the demands of the various lockdowns placed on us all. But how does one quantify what employee well-being means or includes? Well, I'd say a well-being programme often consists of three main pillars. The first is financial. So does the organisation provide adequate financial reward to its employees? That's been around for a while. The second pillar looks at physical health. So this is far-reaching, but it can include how the company looks after its absence management. It can be employee gym discounts, nutritional advice, and where not too cost prohibitive, perhaps private medical insurance. I think it's worth noting there that is not as expensive as it's often presumed. There are some really good options out there through some of the health cooperatives. And the third pillar, which is very topical at the moment, is mental health. And this can include anything, employee assistance programs such as advice or helplines, internal mental health first aiders, which are becoming increasingly more popular at relatively low cost. They're essentially trained individuals within the organisation where people could go to, as they would a traditional first aider for a cut, they can go there for a chat. But I guess essentially what we're looking at is at the core level is creating an environment for employees where the people feel comfortable talking about their mental health and its impact both personally and professionally. I'd also look at employee engagement. I think this is often considered quite a woolly one, but I think if lockdown has taught us one thing, it's people miss contact with people. So to counter the loss of social interaction, employers can encourage staff through a number of initiatives. I know that we have as a firm. It may include staff quizzes, a staff away day when we're allowed to mix, or even just a simple coffee hangout, to name but a few. I would just say to that, I think that that's possibly something we used to be good at within the working environment before the world got all too serious. And finally, I would suggest remote working or an agile working policy for a better description. Again, lockdown has shown us that for many, home working can easily accommodate our working lives. I'm always keen to use the phrase agile working, as this allows staff to work wherever they wish, given certain conditions are met, whereas home working suggests that they must be at home. I think that the balance to strike is one that allows the employee to consider such a policy to be a benefit to them, but also ensures staff get the obvious traditional benefits of also working in the traditional setting or office, whatever it may be. There's always these always include just being able to turn to the person next to you and ask a question, or meet someone you haven't seen for a while at the coffee machine and have a chat. I think these things are priceless, and we just don't get them working remotely. But if we consider remote working, then our new world has no borders. We no longer need to limit our recruitment strategy, for example, locally. We consider it national for talent, or indeed even further afield. So indeed, this brings us nicely on to, I think, our next speaker, who will explore the expatriate world.
Thank you very much for that, Nick. That's very, very helpful. And indeed, you know, as we've talked about already this morning, with flexible and agile working policies, we're now seeing a much more globally driven workforce for those businesses for whom that's possible. And so that then brings us to a whole raft of different tax issues, and I'd like to welcome to the panel, and he's now going to speak, Joad, who works within our expat team. And Joad, I mean, you've seen quite a few changes now around the workforce and who works where and so on. Can we first think about what are the tax incentives for employers in bringing employees in from overseas to work in the UK?
Yeah, good morning, everyone. There's like some concern exactly, and in this post Brexit period, some concern on the ability of the UK to attract inward investments and businesses continue to be raised. However, at the employee level, there are still substantial tax reliefs, and which continue to make the UK an attractive place to work for inbound SMEs or individuals coming to the UK. So broadly speaking, in the UK, we have three main tax reliefs for UK SMEs or individuals coming to the UK. So the first one is the remittance basis of taxation. The second one is an overseas workday relief. And the third one is a temporary workplace relief. But if we take, just for example, the situation where employer want to send employees to the UK, and if the employee work partly overseas, it may be worth it to look at the overseas workday relief. And for this relief to be applicable, there's like certain conditions must be satisfied, and it's quite. It could be like that these different conditions should be quite strict. And like the first one is like the UK, the individual or the employee should be a UK tax resident but non-UK domiciled. So the concept of domicile is complex and based on case law, but in very simple terms, a taxpayer domicile is a place which is considered its long-term home and is based initially on when the taxpayer was born, or where his father was domiciled when he was born. Mm-hmm. So it should be also a remittance basis claimer. So remittance basis is a way how you can tax, how you can be taxed in the UK. And under the remittance basis of taxation, the individual will be subject to UK tax only on his UK income and gains and any remittances to the UK. So the definition of remittances for tax purposes is wide-ranging, and so advice may be required on this point. Mm-hmm. But also for the overseas workday relief, duties of employment should be carried out mainly or partly outside of the UK, but paid partly and mainly outside of the UK. And this relief is only applicable for the three first tax years when the employee come to the UK. So how this relief work basically is earnings which relate to duties performed overseas are known as foreign earnings, and if foreign earnings are non-remitted to the UK, they are not taxable here. But if these foreign earnings eligible for overseas workday relief are remitted to the UK either in the tax year of receipt or a later tax year, they are taxable in the tax year they are remitted. So to apply for this relief, you need to basically the employee need to satisfy this condition, but there's also some issue to consider. And basically, you need to set up an overseas bank account, or you need to use an existing one and just to draw in like all the funds to £10. And you can claim the overseas relief. Generally, is claimed via self-assessment tax returns. But however, here the employers can assist the employee by an agreement with HMRC, and this agreements, namely Section 690, 690, and here the employer can limit the operation of withholding tax via the payroll to the amount of salary expected to relate to the UK duties. So this relief is only relevant for income tax, and there is like no similar relief for social security. So you need to be careful about social security and to look more advice. So at the final point, if you need to look at the different tax reliefs and how, if you want to attract employees or talent to the UK, it may be worth it to look at the different tax relief and the advantages. However, the key point here for all of these tax reliefs is necessary to take careful planning, structuring, and different structures. So because if appropriate steps are taken, the employees could benefit like a generous tax reliefs in the UK.
That's very helpful, Jared. Thank you. And obviously, we're now in a post-Brexit world, which has changed lots of things, as we've seen. But there must be an impact on employees coming into work in the UK, and what is that, and what do we need to start thinking about?
So the impact of the post-Brexit, but also the impact of the worldwide pandemic, we all notice as in practice like a decrease of the short-term business visitors in the UK because we all accommodate to work remotely. So therefore, the last few months, the business meetings are more likely to be done virtually. However, for the time being, we do not foresee that UK long-term assignment will be decreasing in the future. So, and that is like reinforced by the agreement concluded by the UK and the EU. And after months of speculation, they concluded on an agreement which entered into force on the 1st of January 2021. And this new protocol, there's like a new protocol, for example, on social security coordination, and they reinforce like the principle that only one state's social security legislation, only one state's social security legislation shall apply, and stipulates that the default position for the contribution is to pay the contribution where you work. However, there is some exception, like for a multi-state worker or detached worker. And if we take the example of multi-state worker, the new protocol confirms that there are like no limits period. So a multi-state worker is when an individual spends at least 5% of his time in another country, and social security is due in the country in which the individual is habitually a resident, and if he worked there at least 25%. So the fact that multi-state worker is still applicable and there like no limit period shows that the long-term assignment could be still applicable, and we will notice that if you want to attract your employees from overseas, long-term assignment could be applicable. However, as mentioned before, we see that more and more employers consider the request for new employees or existing employees to work remotely abroad. Those virtual assignments do not have any minimum or maximum duration, and the individual remains living, working, and usually paid in their home country. But the duties they performed there in respect of work are generally connected to be undertaken in other countries, so some issues should be considered.
Okay, thanks, Jared. And we talk about a more global economy. Of course, at the moment, UK businesses are constrained in sending employees to work overseas because of COVID and various restrictions. But if we start to think about ourselves coming out of a COVID environment globally, and that might take a little while, what do UK businesses need to think about when they're sending their employees to work overseas?
Yeah, as I said before, I think we all notice there have been a lot of information in the press about companies deploying work from anywhere policies, often illustrated with by images of employees working on a beach, for example. So, however, in practice, many companies' response to international remote work requests are not aware of all the implications. And while they want to accommodate their employees' requests to work overseas, the UK and tax social security implications should not be forgotten. The first thing they need to consider is like their employees' residence position. Broadly speaking, as an employer, they should undertake a residence position analysis of their employees in order to determine their tax position. Once the employee residence position has been determined, then the employer may need to make some adjustment, PAYE adjustments via the payroll to ensure that the correct tax treatment have been applied for the employee, and if they remain into the UK payroll. So it will be like an effect from the departure, and you need to take that in consideration to avoid and to prevent any double taxation. However, any substantive work days would be taxable in the UK, so you need to double check the definition of substantial work days and incidental work days. Basically, HMRC says that it's not about the quantity, but most about the quality. So as I gave like different example, but if you are working in the UK just for checking your emails and not doing like a proper work, it should be not taxable in the UK and is like considered as incidental work days. But if you anticipate that any substantive work days is applicable for your employees, you can, as I mentioned before, apply for Section 619 in order to estimate the percentage of work days taxable in the UK. That is the first thing about the tax, but you need also to consider when you have employees working remotely or abroad, like the social security position of the employees, and that does not necessarily follow the tax position. And as I mentioned, like before, the default rule is contribution are paid where the employee work. So you need to check if they fall under like any of the exception, for example, the mistreated worker or detached worker. So social security position rules are quite complex and depend on case-by-case basis. So furthermore, you should also consider if the employee does not create a permanent establishment in the foreign territory. And finally, it's also important to not forget employer and employee obligation in the overseas location. Broadly speaking, the point to reserve here may include why the employee become tax resident overseas, if so, when, is a tax return is required overseas, is there like a requirement for the employer to register locally for the payroll, for example. So all the answers to this question vary from country to countries, and it's important to take UK and local advice to ensure that all your employee population are compliant with UK regulation and also overseas requirements.
Thank you very much, Jared. We have a couple of minutes just left available to answer some questions that we've had coming in. So very quick answers, gentlemen, please. Nick, turning to you, is there any benefit to companies in employing 2 part-timers as opposed to a single full-time employee? Nick, I think you're muted.
Apologies. Yes, this is something that the supermarkets do quite a lot, actually. Of course, the benefit is if you employ 2 people for half hours and their earnings don't exceed the £720 earnings threshold for national insurance, the employer doesn't pay employer's NIC. So it's cheaper. It is cheaper because you'd have an NIC saving if you employ 2 people as opposed to 1.
Okay, thank you very much. And Alex, quick question for you. You talked about electric vehicles, and you said that, you know, as a benefit in kind. Why are they so tax efficient at the moment?
basically because the government wants to shift everybody to driving electric cars, so they're incentivizing that through the tax system. So I mean, very briefly, you know, the benefit in kind on having an electric car in the current tax year is 0%. Next year that's going to go to 1%, and then for each of the following 3 years it's 2% of the list price. So the employee will pay tax on that benefit. So you take 2% of the car's list price, and that's what the employee suffers tax on. So it's really very little. I mean, the maximum amount is 37% for a more sort of polluting car. There's also a whole range of other incentives around, you know, being able to sort of charge them for free at work and things. But it really is a bit of a no-brainer. And of course, the company or the business gets a full tax write-off for its costs as well.
Okay, well, thank you for that. And final question is for Jared. Jared, you're working in the UK. Maybe it's a loaded question here, but is the UK still an attractive place for employees to come to work?
Yeah, as I mentioned before, the UK have like different tax reliefs, and it's something you need to take in consideration when you want to attract like talent to the UK. And if I speak about a personal matter, a personal situation. When you worked in the UK, there's like different aspects that you are not probably aware when you come, but with significant tax advice and a relevant tax advice, you can basically optimize your tax if you have worldwide income. If we're talking about just a remittance basis of taxation, is like something, it could be very efficient for any individuals who work in the UK and resident in the UK, but who are non-domiciled in the UK. And as mentioned before, the notion of domicile is complex, but if you are born overseas, is saying that you are non-domiciled. If I'm taking, for example, my example, I came to work in the UK in January 2017. I became UK tax resident in January 2017, but because I was born in France and I grew up in France and my father is not English, I'm non-domiciled and my domicile for origin is France. So basically, I've got this tax efficient system, and I can apply for remittance basis if I got worldwide income, and or for example, rental income in France, and I'm not remitting that income in the UK, and basically I will be not taxing the UK on this rental income. So it could be very efficient.
Okay, thank you very much, Jared. We've come to the end of our session on rewarding and incentivizing employees. I'd like to very much thank the three of you for taking part, and for those of you out there in our audience, if you have questions that the team haven't been able to answer during the course of our session this morning, then please do post them up on the website, and we will come back to you individually on those. But thank you all very much, and hopefully you will stay online for our next session, which comes at 10 o'clock on business management and monitoring, and have a good rest of the day.
Thank you.